U.S. President Donald Trump is upending global trade and world economies with his protectionist tariff policies. His latest so-called Liberation Day tariff plan, set to take effect on most countries August 7th, will increase the average effective import duty of most goods coming into the U.S. to more than 18%, according to a report from Yale University, the highest rate in almost a century. By comparison, a year ago, it was 1.2%. According to the report, increased import duties will set back average American households about $2,400 this year, ranging from a minimum of 10% on allies like the UK to a high of 41% on Syria. The unpredictability around the tariffs has stymied global trade, hindered businesses, and caused Americans to dig deeper into their pockets. Trump's announcement of levies on most countries 4 months ago stoked a front-loading of exports to the U.S. to beat tariffs. That provided a temporary boost to some economies, including Asia, and a buffer to American consumers. But that cushion for businesses and consumers is running out, according to U.S. government data released this week. It shows inflation is on the rise and the labor market is bleeding jobs at a much faster pace than originally projected, as American businesses pull back on hiring amid the uncertainty fueled by Trump's trade policies. While some economies that executed trade deals ahead of Trump's self-imposed August 1st deadline, including the Philippines, Japan, South Korea, and the European Union, are breathing a sigh of relief, other countries are dismayed or simply puzzled at the modified rates. Geopolitics appear to have played a part in determining import levies on nations like Brazil and India. Canada's decision to recognize Palestine as a state, as well as its U.S. agricultural policy, reportedly led to a tariff increase from 25% to 35%.
Well, they have to pay a fair rate. It's all. It's very simple. They have been charging very, very high tariffs to our farmers, some over 200%. And they've been treating our farmers very badly. They've been treating our country very badly for years.
Canada responding in a statement saying, while disappointed by this action, we remain committed to CUSMA, which is the world's second largest free trade agreement by trading volume. Meanwhile, negotiations are still ongoing for some countries, including China and Mexico. While U.S. Treasury data shows Trump's tariffs have generated nearly $125 billion this year, according to Bloomberg, average tariff hikes since Trump returned to office could cut U.S. GDP by 1.8% and raise prices by over 1% over the next 2 to 3 years, making the pain outstrip any potential gain for American consumers and businesses. Karina Mitchell, CGTN, New York.